Hello everyone and welcome to Market Index and Livewire Markets C-suite coverage of reporting season. I'm Carl Capolingua and today I have the pleasure of speaking with Fortescue CEO Dino. Dino, thanks for joining us today.
It's my pleasure, Carl. Great to be here today talking to you.
Well, Fortescue's recently released its first half results. What would you say are the most pleasing aspects of the company's performance?
So it was a strong H1 FY24. We finished the first half with 94.6 million tonnes shipped, our second highest ever, combined with a C1 cost of less than $18 US a tonne, industry-leading position. But for me, the most satisfying part of the first half was really our safety performance and how the teams up in the Pilbara really rallied to get that amazing result. And a huge shout out to them.
Sounds like plenty going on at Fortescue. Were there any areas perhaps where you didn't meet the expectations you set out with at the beginning of the last half?
Look, it was quite a strong first half, but we always aim to do better. That's a true Fortescue value that we have of setting those stretch targets. But I think in summary, to have a 94.6 million tonne second highest first half shipments ever, setting ourselves up for another record year in 2024 with H2, pretty good half, I'd say, all around.
Dino, the business is clearly now delineated along the lines of metals and energy. And our readers, no doubt, are very familiar with, let's call it old Fortescue, the iron ore part of the business, but probably less familiar with the new part of Fortescue, the decarbonisation part of the business. What can you tell us about the aims of this business?
Sure. So first off, again, thank the listenership for their support over the last 20 years. We really couldn't be here today talking about a future without the fantastic support. And hopefully we've rewarded that support over the years. So a couple of years ago, we announced a pivot into green energy. We also announced a pivot into green technology and green metals. So what does that practically mean for us? So yes, we have made a step into a market that we believe could potentially be significantly bigger than iron ore in green energy and green molecules. So hydrogen, liquid hydrogen and ammonia. But one of the areas that's probably untold is the decarbonisation thread that links the two businesses. And we've made a real zero commitment by 2030 to remove all hydrocarbons from our business here in WA in the Pilbara.
You've talked about this real zero concept. I've also heard you talk about you want to do it without offsets.
That's right.
And some of the issues around offsets. Maybe you can just expand on that for our readership to help them understand that how serious you are about this goal.
Yeah, so you're right. Our first target was actually by 2030 to have a net zero position using offsets. Since then, we've shifted our view and we're targeting real zero, which means you don't procure offsets from a market which somebody else is using to sequester carbon from the atmosphere. We fundamentally don't believe in some of the technology, and we don't think that that market is mature enough to ensure they're sustainably sourced offsets. So we've done away with that. We're even pivoting our diesel rebate into reinvesting into ensuring that we're supporting decarbonisation where it matters, which is where those big emitters are. And industrials account for the majority of CO2 emissions on the planet. And we contribute between 2 and 3 million tonnes of CO2. So how can we, on one sense, be advocating for a green energy business without cleaning up our backyard? And so I'm really proud, actually, to sit here 18 months on and report really good progress across decarbonisation. I may have been a little bit more anxious 18 months ago about some of that technology that didn't exist. We have now clear line of sight to ensure that all of our business here in West Australia is real zero by 2030.
Green molecules, green electrons. For many of our shareholders, that's probably jargon. They probably bought your shares because of the great dividend yields. Some of them are concerned about how this new push into decarbonisation might impact profits. All they can see is CapEx at the moment. What can you tell these shareholders about how this new direction for the business could contribute to profitability in the short term and long term?
Sure, great question and one I field a lot. And maybe if I can give you some assurance, yes, we are a very ambitious company and we set goals that nobody really is willing to take on. But at the core of who we are is a steely fiscal discipline process that vets a lot of what we do. So we are absolutely sure that what we're doing is the right thing for the planet, but it's also the right thing to do for the bottom line. I'll give you an example. Our decarbonisation agenda that we announced 2 years ago now, US $6.2 billion to decarbonise our operations in the Pilbara, will offset 700 million litres of diesel. If you do the sums, that's a couple dollars off the C1. So our current industry leading position will only get stronger by decarbonising.
Dino, I've also heard you say when you set out on this journey of decarbonisation that a lot of the things you needed, the technology and the machines just didn't exist. So you've had to go out and build them or acquire the technology. Is it fair to say Fortescue is a new entrant to a new industry? And what can you tell shareholders about your expertise to be able to actually pull this whole decarbonisation thing off?
Sure. Again, a great question, and it couldn't typify us more than who we are. We don't mind being the first to step into an area of discomfort, and it's often that disruption that actually creates creativity, and you see some of these technological breakthroughs. And maybe you reference a speech I gave 18 months ago where at the point in time there were some areas which we had no idea on how we were going to solve, right? We just knew we had to do it. And lo and behold, 18 months later, we've purchased the Williams Advanced Engineering asset a couple of years ago now, brought that group of people into our business. We've partnered with some real novel small and large companies, and we've got a comprehensive plan now that looks at the generation, the distribution and the consumption of what is currently hydrocarbon-based energies and converting all of those into green energies. An example is our partnership with Livewire, where we'll convert all of our current diesel-consuming haul packs into battery electric. And this morning I was at our testing facility at Hazelmere here in Perth near the airport, and it was fantastic to see already one of our trucks, our battery electric truck, the Roadrunner, is in the Pilbara operating, and on the weekend it carried its first 240-tonne payload, charged in 18 minutes. That's what we were talking about. To see it in reality was fantastic. This morning I saw the hydrogen fuel cell equivalent. So in a couple months we're not only going to have the battery electric but also the hydrogen fuel cell electric trucks out in the Pilbara in a production environment. It's so fantastic to see people coming together from all walks of life now. People who have no idea about some of this technology and people who've been doing that technology for 20 years coming together and solving some of these problems.
Yeah. Oh, that's great. I mean, it's exciting to hear some of these developments. Let's fast forward. Let's assume it all works out. And in a few years' time, we've got a great iron ore business. We've got a great decarbonisation, future technologies business. Do the two businesses stay together? Would you consider breaking it up?
Yeah, again, it's a question I get a lot, and I think sometimes it's driven by a little bit of a short-term sentiment in terms of let's cash in now and get some of that value in the technology vertical that you've created. Look, we have a slightly different view. We believe that the 3 or 4 technologies that we've invented over the last 12 months, which are truly disruptive in the industry, could not have been done if we did not have the backing of the 20,000 people, contractors and employees alike, who share a set of values that enables us to achieve some of these results. So I can't see for the foreseeable future us shifting that. In fact, we've gone the other way. We've created a one Fortescue model. Yes, we have 2 CEOs, which is not typical in the Australian environment, but Hutch and I are joined at the hip and we share everything else. We have a great shared service model where we share a balance sheet, we share all of our functional expertise, we even share technology now. So I can't see that marriage splitting up. In fact, it's only getting stronger.
Yeah, well, it's funny you mentioned the C-suite because that was going to be my next question. Dino, 3 CEOs in the last 18 months, plenty of other C-suite changes. Now I hear the passion that you have for this new direction for the business, and I feel maybe in you, Mr. Forrest has found that person with the right DNA to enact his vision. How closely aligned are you to that vision, and how do you deal with the inevitable disagreements that come with running such a complex business?
So look, one of our values as an organisation is family, and healthy families argue a lot. You know, we share some heritage as well, Carl. And in those families, you do argue a lot and you love each other the next day. And that's no different to Fortescue. It is a little bit different, though, than you normally find in a corporate environment, where sometimes that passion isn't really shared on a boardroom table. We have that all the time. And I can assure you, we debate a lot with Andrew and the board, and he challenges us a lot in a meaningful way. It's done with a lot of respect and care. But I do think what runs in all of us at Fortescue, not me specifically, is this unique values. And if you're aligned with that as an individual, you'll find it very fulfilling here at Fortescue, because you can really create that future and be unencumbered in stepping forth in the unknown, knowing that you've got this amazing set of values and amazing organisation right behind you. And then the outcomes that you see, like my experience this morning, Hazelmere, they showed me a 6 megawatt fast charger in development. We've launched the 3 megawatt, which will charge it in 18 minutes. The folks are even talking about one that charges in seconds, which they've adopted out of Formula E. It's just phenomenal, and it's quite invigorating to have that now in action.
Dino, if you permit me, I threw the prospect of interviewing you today out to our social media channels and sought the opinion of our Fortescue fanatics for a few questions. The first one is about steel demand from China, more specifically the property market. Certainly that is the largest consumer of our iron ore. But what's your take on steel demand from decarbonisation industries, and what are you seeing on the ground there?
Yeah, great question. There's actually two, what I call green shoots, that we're keeping a close eye on, and decarbonisation is one. So particularly in China, they've made a real commitment to invest in solar and wind and renewable infrastructure, and their penetration of solar in the last 12 months is mind-blowing. And there is actually a lot of steel that's going to be used to build some of that infrastructure. And I often say the one critical mineral that no one's talking about is steel and iron ore. Right? When you look at the volumes associated with it, it eclipses all of the other critical minerals put together. So we're very bullish in terms of the long-term fundamentals of steel-driven demand, particularly through decarbonisation infrastructure rebuilds. As the property sector, I would say, normalises rather than dips. You know, year-on-year growth percentages on a much higher base is still a lot of steel. The other sector we're keeping a close eye on is automotive. I was in Shanghai recently and was amazed by the EV penetration that's happening in China right now. And again, there's lots of steel that goes into a car chassis, and you can see clearly they're setting themselves up for higher end manufacturing to supply the world in terms of what it wants in terms of green infrastructure.
Yeah. Second question from our Fortescue fanatics. Do you have any clear roadmap to start developing new markets for your products? And probably similar to the last, but the reader is specifically talking about your Gabon project and demand from Europe.
Sure. So our non-China book in terms of sales has been maturing over the last few years. Currently, China accounts for around 90% of our sales, but we do see a growing market in the US. The economy is growing really strongly in the US and also into Europe, where green steel is probably more mature than other areas. Hence, you know, first cab off the rank for us was our Iron Bridge product. It's a perfect product that can go into the green steel industry now, into Europe. It's a 67% grade, and we're commissioning the plant at the moment. Gabon, which you touched on, we were there only last week. The ore body's amazing. It's a fantastic potential. So we're drilling that ore body at the moment. We're getting some really exciting intercepts, you know, north of 65, 66, 67% out of the ground. And you know, our focus is to define that ore body over the next few years, study the project, and look at how the logistics and port options will work. And as you mentioned, it's quite strategically positioned for us because it gives us a lot of options into the Atlantic market, into Europe, or a potential blending option for the Pilbara here at home.
Final question, Dino, is probably the most popular one. Plenty of our readers are into other decarbonisation metals, particularly lithium or rare earths. I know we talked about iron ore prices have come off a little bit, but otherwise you've been lucky compared to some of these other commodity prices. Readers are saying stocks in some of these other companies are cheap. Are you looking to grow your portfolio in this space?
Sure. I mean, we have a great corporate development team that's always assessing the options on the market for us. But we believe our value is through the drill bit. So we have an excellent exploration team, which started our organisation. That team is still intact by some of the very same people that found the Pilbara. They are exploring in Latin America. We have some really exciting prospects in copper and rare earths, and also in our mainstay of our business in the Pilbara, where we continue to be surprised on the upside with the hematite that we're finding. So it's a pretty good position to be in, to be honest. And the team hopefully has an announcement coming soon around copper or rare earths that we can talk about next time.
We can talk about it now if you like. Dino.
A bit early, Carl.
Bit early.
Yeah.
Dino Tranter, you've been so generous with your time. Thanks for speaking with our readers today.
No, I appreciate it. And again, last comment I'd make to the listener base, we really, really appreciate your support over the last 20 years. And as we enter this world of uncertainty, particularly around climate change, we firmly believe we've been part of the problem in the CO2 that we've emitted out of our operations. And we want to show the world that you can reverse that trend and maintain a successful business. So again, thank you for yourself and all of the listeners that you have. Really appreciate it.
Well, if you enjoyed that interview, make sure you give it the thumbs up and make sure you hit subscribe as well to stay notified of all of our future video updates.